Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right, guys, welcome back to another live stream. Sorry for the delay. I got to put up my screen here so you guys can see what I'm looking at. Hope you're all doing well. Happy Monday to you. Back in the markets for a new week. For those of you who saw my Sunday video, you probably know most of my current positioning, what I'm looking at going into this week. I'm still long S&P 500, holding on to this trade. Well, not still long. I'm actually back in my trade, just to be clear. For those of you who are sort of everyday viewers of the show, you may have saw my campaign with the S&P. I traded it from November until, well, let me get my pin here so I can mark this up. I actually bought like very close to the November lows, but to be very clear, I was very early to that idea. I was trying to buy the S&P as early as, September and October, and, took some NASDAQ losses along the way down. Finally caught this breakout here and rode this thing for a good move here up until this point here. So I ended up getting trailed out. Price moved on a little bit without me. I was a little bummed out about it, but it ended up being a decent decision to go ahead and trail stops, as I got a chance to actually re-enter at a lower price than where my previous trade was. Taking a look at the S&P 500 here today, my thought process is essentially we're holding support, and until proven otherwise, we could actually rally from here. I mean, now this is not a massive pullback, but I want to kind of think through this with you guys here on the S&P for a moment. So we're taking a look at the S&P, and price was explosive, like really, really strong. Pulled back, broke out, and then started to kind of come down for 1, 2, 3, 4, 5 straight days of pretty much selling. And then we had a stall out day. On that stall out day, I was more confident than previously at, hey, perhaps this is actually stalling out at a key level of support and could potentially rally from here. So I like my risk to reward here. I am long S&P, like I said, and stop loss is below the previous low. So if markets do decide to roll over and fail at this support level, that's going to be my key to go ahead and close out of this trade. But again, I am long. Currently floating $883, as you can see, $900 on my my Webull account here. So we'll see how this plays out. But so far, looking okay. NASDAQ is actually doing even better here today, up 0.5%. And there goes the Dow, actually lagging today. So a little bit of risk sentiment coming in. PMI numbers were cool on Friday, and jobs numbers were relatively strong despite some revisions lower. You got gold pulling back here today. Here's a 1.2% down move on gold here today. So gold bears kind of took the lead here, I suppose, as I thought actually it would break out. But if you guys were watching with me on, in fact, we can actually mark this as a bearish breakout because this was pretty impressive on the 4-hour chart. Bears really got strong here, being able to actually break through the lows. So I'm just going to mark this as kind of a bearish breakout point. As you can see, what happened is we went into consolidation, and I thought during this NFP craziness, it definitely fooled me. Although I didn't take any trades during this time, I was watching it really close on NFP. So this section right here, all that wonky price action, that happened during NFP. And what happened is that price came flying down to support, and it actually looked like we were going to break out there. Sure enough, shortly after, PMIs came flying back into the picture. PMIs basically showed that the economy was still growing, but actually, sorry, let me back up. NFP happened, it shot it down, and then kind of reversed back as the revisions came into the picture and jobs data kind of looked, not incredibly strong, but not incredibly weak. So we kind of flattened out on the candle. That's why you had this big move. This candle, what actually happened is that bulls got excited. And then what actually happened is that PMI numbers for services PMI numbers came out and actually erased those gains. Like it liquidated those gains. Why? Because the economy seems to still be growing despite everything that's going on in the economy. The services PMI came out positive. They were showing growth, but not as much growth as was expected. So we saw the gold market get so excited and then kind of come back after that PMI news unfolded. Meanwhile, fast forward today to what's happening today. Well, we came back down. We rejected completely after I thought it would be sort of a break and retest opportunity if we got a nice close above. We didn't get that. So price rolled over completely. Now at support level, it broke. And that's why we just marked our bearish breakout signal, which again, short term, bears seem in control of this gold market. Now, you guys who have been watching for a little while, if you've been keeping up with my analysis, I'm actually bullish on gold. But I'd like to see the 4-hour chart turn around before I can actually decisively make a move here. We are getting a reaction as we speak on the 4-hour chart of gold, and we'll see if that does in fact hold, right? We'd like to see, in my view, I'd like to see a break, a retest, some strength come into this market before I can actually look to get long myself. Hopefully that makes sense, but that's kind of what I'm thinking on gold here as we get started today. Is I'd like to see that this can prove itself. We've had so many instances where bulls can hold a support level, but they can't break a resistance level. Does that make sense? Price action traders, simple idea here. If you're in a downtrend and bulls are holding support, that's not necessarily bullish. A true reversal is when bulls are able to break resistance. At least that's how I like to look at price action, right? If you're bullish, you need to see, it doesn't matter if support holds. Sure, okay, that's temporary relief before sellers took over again. For me as a bull, what I need to see is resistance to break. Show me that bulls are entering, because I'm not the biggest fish in the pond here. I can't control what the price of gold does, right? If I had $100 billion under management, maybe I could do a little bit more controlling of the price, but I don't. So I need to wait to actually see that sellers get beat at a key level and that buyers are back in control. So that is where I am personally with gold. I'm waiting to see if we can get a breakout. I'd like to start marking up bullish breakouts before I actually look to get long. Does that make sense? Type yes in the chat if that was helpful to you, if that made sense right there, so that I can move on to other things. There's a lot here to talk about. By the way, oil dropping hard here today. Take a look at this. What I thought to be a bullish breakout ended up being completely a fake out. I was actually looking at oil to possibly get long, but again, my idea there would have been completely dead wrong. Oil looked like it might have been trying to get above this resistance and now completely faded. Sellers completely taking control of this move. And wow, what a sell-off for oil. By the way, guys, if you're an oil short today, congrats. That's a huge move. What a move for the oil bears. And again, I have to kind of humble myself and say, well, my price action setup here might have been a little bit optimistic. At the end of the day here, it does seem like resistance was a little bit more stubborn than I thought it would be. I didn't have any trades on this, but again, I still will try and highlight where I thought something and I was wrong. I guess next level for oil, if you're watching it, would be, can we actually break support here, right? So you got support coming into play. This is a pretty wonky market on the 4-hour chart, though. We're back and forth, and I don't really see a clear direction. If this level consistently or decisively breaks out lower, then we have a different story. And by the way, I think this oil sell-off, the market is liking this. This probably continues to show inflation is coming down, and it helps my long position, I think, on the S&P. So yeah, we'll keep an eye on this. We'll definitely keep an eye on this. Again, I'm long S&P. We're up $1,400 on this trade right now. Trade was called out inside of our Discord channel. If you're not already in the Discord, let me just show this to you real quick. If you're not already inside of our Discord channel, we have a chat room available. We also have, of course, our trade alerts being shared. If that's something you're interested, if you'd like to get indices notifications. Again, I took this trade last Friday. So if you would like to get notified whenever we enter trades, whenever we trail stops, whenever we move positions around. If you would like to get those notified directly to your phone, I'll tell you how you can do that real quick. You can even try it out for a month. If you shoot us a direct message, you can try it out for a month. You can purchase a monthly membership, or you can purchase a lifetime membership, whatever you'd like. We'll drop the link here in the chat for those of you who would like to learn more about our Discord service. Our VIP group is highly, highly worth the money if you are not already in it. Don't take my word for it. We have many people who leave us great reviews. Thankfully, we have a lot of great members in our community that contribute to it as well. It's a great chat room environment. It's a great learning environment. And of course, you can see all the trades, ideas that we are sharing throughout the week. So yeah. Just clicked. I don't think he's talking about fundamentals. Oh, don't worry. Don't worry. You can't keep me away from fundamentals. Are you kidding me? Fundamentals are always around the corner. You turn on my videos, turn on my live stream. It's just a matter of time before I get dragged like a magnet, a moth to the flame being the EDGEFINDER. The EDGEFINDER is everyday analysis. Speaking of EDGEFINDER, bullish, bearish setups. Let's make sure we have the latest data here. Okay, so US 30 still bullish. Euro Aussie, Pound Aussie, Euro Kiwi, Euro CAD, Pound Dollar bullish. Interesting. Let's go look at the pound in a second, guys. Aussie CAD, Aussie Kiwi, Aussie Swiss. Okay. Take a look at these for a second. Let me just look at the pound really quick, see what's going on with the pound dollar here. I am long euro, by the way. Okay, pound is looking interesting. Can we actually get a breakout here? That's going to be the question. Previously, when price tried to get up in this area, we saw a big rejection. So I'd be interested to see if we can actually get a decisive close above resistance. Let me just clean up my chart here just a little bit. So we have resistance recently. It seems like the 1.2725 level has been holding pretty well for sellers. Again, we'll have to watch this one today, but if price can actually get above this, like close decisively above, that actually could be a signal that the pound dollar has more room for upside, in my opinion. Yeah, so we will have to see. But again, I like pound dollar. That's an interesting one. I mentioned euro dollar. I am long euro dollar, slightly in the green on this one. This is kind of a daily chart level, to be honest, though. Let me show you this. So this is my daily chart for the euro. Nice overall upward trend. It looks like we might have actually found a bottom on this. My stop loss is below the lows. So if this does break support, we'll be out of that trade. But if we can hold this and actually rally back to the highs, I'll look to trail a stop on this one and see if I can ride it for a little bit. But watching that one close, euro dollar. Quick look at dollar yen. Dollar yen possibly finding a top here. We can kind of tighten up our resistance levels here just a little bit. Looking a little top heavy as we speak. We'll see if that yen can come in strong, but look at the way price action has unfolded on dollar yen. This is interesting. Price rallied up, 3-bar move, just strength up into this resistance at 144.5, ticked higher on NFP day, retested 146 and immediately found sellers. Sellers punched back down, and now perhaps the follow-through move. I think it's time for sellers to prove themselves here. After a candle like this, look at that candle. That candle, in my view, would show you a lot of indecision, but now it's kind of up to the bears to prove it. Let's see the follow-through move if sellers are strong. Dollar yen, probably not a sell for me just because I don't see it on the EDGEFINDER at this time, but let's see if we add neutrals back for a moment. Where's dollar yen? You see dollar yen's neutral, so I'm probably just going to hang tight on that one for now. We did get new COT data. I think Frank is going to help us out with that in just a moment. We'll talk COT, see if there's anything worth mentioning. We'll come back to that in just a moment with him. Before we do that, let me just have a quick look at retail. Here's the major currency pairs for those of you guys who like to keep up with retail positioning. What we see is that you have the Australian dollar and dollar Swiss. Let me make sure, by the way, this is the latest data we have. Yeah, so should be relatively recent data. Dollar yen, this is actually kind of interesting. This is a bullish signal for dollar yen. We're seeing retail traders be very short, so that's another reason why, again, the EDGEFINDER's not giving it a bearish read. Is dollar yen seems to be, again, retail traders are pretty heavily short on it on average. So that's just going to at least caution me a little bit. We also have the seasonality scanner. If you guys haven't seen this, this is a really cool new tab on the Edge Finder. It helps us to spot seasonally moves that could be coming down the pipeline, either this week, next week, this month, or next month, etc. So I find this to be very, very cool. For example, gold this month is expected to be positive on average by 2.4% based on the last 10-year historical averages. And next month is also expected to be good for gold. So this month so far, we seem to be bucking the trend here a little bit, because we're not seeing 2.4 so far, but it is early in the month. We still have, 2/3 of the month left of trading. So we'll see. And perhaps there's a little bit of a catch up next month. So I like this odds still for a bullish, beginning of the year for gold. But so far I've been incorrect in that idea. Fortunately, I have not been taking any trades on this move, but I still think there could be some bullish upside for gold. We'll have to watch and see. All right, guys, we're going to go take a quick break, thank our sponsors that make these shows possible. And then after that, we will be coming back to the show to speak with Frank, one of our in-house analysts here. A1 Trading, of course, has 3 traders. We have myself, Ivan, and Frank. You probably have seen all of us on the shows at one point or another, but we'll be taking a look at some setups with Frank in just a second, just after this.
Attention, A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker, Eightcap, is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, we're back with Frank. Hey, Frank.
Hey, how's it going?
Pretty good. Frank, you mentioned to me on Friday, you're like, hey, look at the COT data. Now's our chance to share it with the world. What do we see on Friday's NFP data when it dropped? I'm sorry, NFP, COT data.
Yeah, so I like seeing this because COT's buying up the indices and more risk favored pairs or assets, I mean. So we got not only US 30 and NAS, but we got Aussie, Kiwi, CAD. And then on the flip side, dollar is still selling, which is good to know. Oil's still selling, which is also good. So I guess the only thing is S&P is kind of selling too, but I would say it's leaning more bullish than bearish, but I guess you could also argue it's mixed sentiment. But this is kind of the same thing as last week, so I'm glad it's continuing to be, further selling of the dollar and then further buying of the indices. So that's good. And then now we have 3 assets that are kind of strongly bullish for this week: the CAD, Kiwi, and Aussie dollar, which is good. Hopefully we see more, like we can see euro and pound get out of that neutral zone and more so into the long favor. But yeah, so that's kind of what's going on.
Yeah, I think that's a good point. And we talked a little bit about that. For those of you who missed our conversation last week, Frank and I were pointing out that one thing you can do with the COT data is you can look at like a summary of what the report is telling you. So like on my screen, I'll show this real quick. US 30, CAD, NASDAQ, Kiwi, Australian dollar, all of these, when collectively looked at, you can kind of see that, there's more risk on assets, as Frank pointed out, that are being bought. Meanwhile, some of the more risk off assets are being sold. So definitely a positive sentiment. Again, these are your professionals in the industry. Is this data a little bit delayed? Yes, but it still shows you kind of a consensus amongst the smarter traders in the room. So definitely useful. Frank, you've got a chart pulled up there. We'll go back to your side of things. You got gold pulled up. What are you thinking about this pullback?
So I guess I'm painfully bullish. I'm still in the long trade from last week.
Okay.
But price is just hanging out at this trend line, and I'm currently in drawdown, but I still have a long bias on it hopefully today will be some rejection, and we'll get some more, I guess, support. Because if it breaks under this level, like say it closes under this trend line, we got a long way to go before I see another buying opportunity. So that's 1980s, I guess, 1970 to 1980s. And currently we're 25, 23 points above 2000. So this is going to be if it doesn't hold here, I'm going to have to wait longer for another long entry. But, from NFP last week, I was still kind of comfortable with the gold trade, because we talked about last week that either way, bad jobs numbers or bad economic numbers can arguably be good for gold, and in the same sense that good economic numbers can also be good for gold because of the Fed and the easing that we're hoping to get eventually,
Right.
from like rate cuts and stuff.
Yeah, I like the story too. I mean, I think that of the outlook for 2024, I think most scenarios favor a weaker dollar still, and it's off the back still of yields coming down. I mean, unless we see a huge tick in inflation and something changes in this story and the economy is way hotter than we think right now, for the most part, that leans towards cooling economy, weaker dollar, and that could be either recessionary or just simply a cool down the economy. Both of those scenarios could actually be positive for gold. So we'll watch that close. You got NASDAQ pulled up as well. What are you thinking on NAS?
Well, I was going to say that chart looks exactly like UJ, which makes sense.
Yeah, it does.
I thought you had UJ pulled up, but I'm still in the NAS trade. The NAS trade's doing all right.
Nice.
I don't have Discord up, but I got in somewhere around here. So looking good so far. Bounced off that support level. I want it to come back up to 16,760. So hopefully that happens. But yeah, just right now I'm in gold and NAS.
Very nice. And so I've just pulled up your Discord alert just for people to see the alert that you sent. So taking along on NAS after news, took price to 200 SMA on the 4-hour time frame. Index is now at a +7 for the EDGEFINDER. Yeah, that's a heck of a trade, Frank. If that is in fact if indices are finding a low here, that could be a very nice risk to reward trade on the NASDAQ. I've got S&P so far. Look at that NASDAQ though. That NASDAQ is definitely outperforming on the day, up 0.75% compared to my measly 0.19 on the S&P. But to be clear, Frank, we talked about this on Friday, I barely survived my trade. I think you were in the same boat, right? We almost got stopped out on that move down on Friday.
Yeah, I got close.
Yeah, it was a tough call there. Also, Frank, not random, but what a move from oil here today, almost 5% down. That's such a crazy sell-off. Do you know anything that's going on that would cause that?
No. But I do have an idea. I have an idea. It's a technical idea. So despite whatever's going on, which I don't really know for sure. Wait, tab robust. Okay, never mind. The idea was this though. Let me zoom out some, I guess. So you see like several weeks of just sitting in like a certain spot before you get like a couple points of rejection, and then followed by months of upside, which is kind of like this too. So you have some rejection here, followed by a couple weeks of upside. I'm thinking that you stay in between 67 and I guess 76 price wise, and you're comfortable with the price swinging in between these two levels. I think that, if you get rejection this week, today's really bad, but you can get maybe some rejection later on this week or later today, and be comfortable with having price swing in this area, because if it's followed by upside I feel like you'll be getting like at least a month of this just going up. So that was very poorly explained, but I was looking at
No, I see what
just
you're
what it's
saying.
been doing in the past.
And I think we had somebody in the chat contribute this also. So Saudi Arabia slashed prices on oil. I think that's contributed to the sale. I pulled up an article on that as well. That does seem to be the case. Basically quoting that there's softening demand outlook. And so they still, that's one of the things. If you're an oil producing country and demand is, OPEC has these ideas where they kind of like want to band together to keep prices at a certain level, but we've seen some of them falling off the wagon, going against the grain there. And now we see Saudi Arabia, which is of course one of the big ones, right? And so if they're saying, hey, we're going to lower prices, clearly, demand outlook is a little wavering. And so that naturally brings the price of oil down. So very, very big move there. And, the way it actually interacts with other markets is very important too. Like I said, I think that can continue to fuel the inflation story. So that thing that we discussed earlier about, the kind of tail risk of if inflation spikes higher, then suddenly you get the strong dollar back in and gold drops tremendously. Well, cooling inflationary numbers can be helped by oil dropping by 4.7%. If you're wondering why, if you're newer in the audience, you wonder what that means. Frank and I often point this out, but lower costs in oil means that all of us are going to pay less at the pumps. And that means more extra spending money for the average consumer that can then go spend it with stocks or with businesses. And of course, their stocks can do well in that environment. And again, and the inflationary, price raises will likely sort of fizzle, and that will continue to help the story for a weaker dollar. But we'll have to see. Dollar is slightly down off of this. And we haven't even talked about the US dollar index, Frank. I'll ask you to look at that chart in just a second, but I just see it tagging resistance, pinging at this level, and it should be interesting to see how it plays from here. Do you think the dollar? How much more room is there for the dollar to slide? What do you think?
I'm not entirely sure, but I am bearish dollar. It broke above, but it couldn't close. And now today's doing kind of the same thing, open above, but it's coming back down. But let's look at like the weekly chart. This is 2022 when the rate hike talks were going on. So we had this move. And I would say that we're like near that level again, but still a lot of room if you're talking about the weekly time frame. So what is this, like it's in the 90s? I guess maybe you go to mid 90s or low 90s, but that's just spitballing. I don't really know exactly where it's going to go, but I'm pretty confident that the dollar is just going to keep going lower. And where it bottoms, I don't know. But the reason why I'm long indices on gold is because I'm short dollar. So I feel like I'm confident in the direction, just not the level.
Fair enough. Yeah, no. Well, thanks, Frank, for going through that. I know that there's just a lot going on with that oil price. We put you on the spot. I was on the spot too. I didn't actually know what was going on, but interesting moves here today. And congrats on that NAS trade, up almost 1% on the day. So hopefully that can find its bearings. And for both of our trades, again, I'm long S&P. Frank has me beat, just hit 1% on the day, up on the NASDAQ. We'll have to watch that here for the rest of the day. Frank, thanks for coming on. We're going to have Ivan slide in behind you, so we'll let you go for now.
Okay, thanks. Sounds good.
See you, Frank. All right, and now we're going to bring in Ivan. Say hello to our other A1 trading analyst and coach inside of the group. It's Mr. Ivan FX. Hey, Ivan, how are you?
Great.
It's good to have you back. I haven't actually. We missed you last week, and now you're back. You're new year, new Ivan, new beard setup. You look very. Your beard looks great today, by the way.
Thank you, by the way. Wasn't it like I probably called it last week or something? Wasn't it like New Year's Day or something.
Funny. Yeah, no, you're right. For Monday, Tuesday, the markets were pretty dead, but we're back here with you now. So, Ivan, new year, new trends. What are your thoughts on the markets right now? I've got to catch up with you. I haven't spoken with you in a little bit.
It's going to be crazy this year. It's going to be magnificent. I don't know. Sorry. The thing that is important to note is the U.S. election by the end of the year. What happened in 2020 was that it went flat from around August forex-wise until the election. That also meant that January, February was very great for stocks in January, February that year or earlier. So it seems like all the pricing of all the profits is being made now. That's why it's going so high. And then we will go into some kind of range, depending on who is going to win. I'm just pulling up the reason for why oil is falling, because you're like, hey, Frank, I'm putting you on the spot. I'm like, you should put me on the spot because, you know.
Well, that's why you're here. Ivan, you're the man with the plan and the answers. So what do we got? So it's Saudi Arabia related. Oil takes a beating after Saudi Arabia lowers light prices to 27-month low. Wow.
So it's, well, okay. I didn't see that one coming, to be honest, but it is what it is. So I was also wondering about this S&P 500 low. I haven't seen you trading it. Maybe I'm blind, but right now it seems to me a bit more interesting of a reversal.
Yeah, I picked it up long and barely stayed in the trade. I am in the trade right now, so I picked it up long last week.
Okay. So maybe I'm just late to the party then. So it's just me then.
Are you trading it too?
No, not yet. That's why I'm saying late to the party.
Gotcha.
You know? So this is interesting. This is a great environment I want to be in. I want to see Fed cutting interest rates, though NFP on Friday wasn't necessarily the best outcome possible, but you know, it is okay. It is what I want to see because I've previously said I talked a lot about trading conditions you want to be in, and now the stars starts to align against with dollar bearishness and S&P 500 and Nasdaq bullishness. So for me, it's just a new high pullback, and I'm good to go.
Yep. No, and to kind of elaborate on the NFP Friday, we didn't get a chance to chat about that yet. The jobs numbers, they weren't. I think I kind of took it as it wasn't bad, right? Because it wasn't too hot. There were some revisions of October's numbers, so they revised down as they've been doing for like the last 15 NFPs. But we saw overall, we're seeing cooling in labor market, but not absolute destruction of the labor market, which, if you and I are talking about S&P bullishness, that's kind of what we wanted to see. You also saw PMIs, which actually gave the market a nice boost. I don't know if you saw that services PMI number was like Goldilocks. It wasn't too hot, but it was a slowing in the economy. Still growth, but less growth. And that is exactly what the market wanted. So I actually think that Friday's round of data was helpful. Now, initially, there was a little bit of freak out, right? Wage growth was stronger than expected. And so the stock market sold off a little bit. Dollar index rocketed and then kind of came back. And, dollar index as we stand, what do you think about currency pairs right now, Ivan? Is the dollar, going lower? Is it going higher? What do you think?
Yes, good question. The answer is unlimited bottom. You asked Frank, where is it going? I think dollar's going to continue falling. To where, to when? It all depends on when the end of the monetary policy is going to be. If CPI continues to fall on Thursday, if it continues to be around less than 3% inflation year over year, that'd be great. Then this one should continue lower. The seasonality of it is bullish for January, so I don't like that. So it's a bit of a mix in my head. I don't know where to go at the moment. But if this one breaks 102, I think this is continue lower. I think euro dollar, Aussie dollar, pound dollar, New Zealand dollar currently has like a pullback to a greater push higher. The only question is, are we going to break higher on euro dollar, on pound dollar? By the end of the month, I am not so sure. But I'm just going to take one side at some point going forward.
I think that's just fine in my opinion, because I made this point last week a lot, Ivan, that there was a period of time here where it was like dollar bearishness was so in consensus that I was a little bit worried. And I think you feel this way too. Like when something kind of reaches a monthly pivot for you, or it's like becoming extended, it's just a time to like back off a little bit and just say, look, sentiment is getting too one-sided. One side of the bench is getting too heavy, and let's wait for it to kind of normalize. I think that it's reasonable to say we've had a bit of a pullback on the dollar. Jobs numbers didn't change anything to the narrative, like you just said. You simplified it very well, right? The dollar's in a downtrend. The interest rates are coming down, and so when you have this pullback, I think it may seem almost too simple, but perhaps that's all you need, is just to say, well, it's in a downtrend. Interest rates and inflation are cooling. Nothing has changed to the narrative. Path of least resistance, the way I like to say it, is path of least resistance is down here. So unless something changes, I think another way of saying that is that the burden right now, I would say, is on the bulls to prove something, and the bears kind of have the upper hand until something changes. Maybe you get hot CPI numbers on Thursday, and then Ivan, we're both looking at this differently. But for now, inflation's cooling. We'll take a look and kind of stay in that camp unless something causes us to adjust and be reactive to it. Would you agree? Is that fair? Like, is it almost that simple?
Well, we'll both look at Thursday and Friday for CPI and PPI. I see it as doesn't have more than 0.2% deviation from the expectations, which expectation is 3.1, I think 2.2. Sorry, last was 3.1. So if it comes around 3, that is continuation lower. If it comes up at 3.2, 3.3, 3.4, oh, we have a pause. And that's gonna make some waves in the market. And then we have, if FOMC is around 30th of January or something, so we still have another 2 weeks, give or take, of trading before FOMC. So to me, yeah, I just need the confirmation of a lower than expected CPI, and I'm good to go lower. And is that the best way and the only way? I don't know. I feel like I'm trying to do the short-term, long-term kind of situation. I wait now because it's not bearish. And then hopefully that's going to lead me to the long-term success I'm hoping for.
Yeah, well, I think I've kind of gone ahead and moved in on my dollar side things. I am long euro dollar. I've got it pulled up on my end. I am long EU. Price came down here, and I liked the way it held this level. I joined it a little bit late. I didn't catch the lows, but I did enter this on Friday, and we'll see where that one goes. But again, I kind of like the way we set that up, Ivan, because if you think about it, CPI and PPI could take me out of this trade. And if that happens, it's justified. Like if CPI and PPI come out hotter than expected, I should get out of this trade. Like it killed my idea. Whereas if we had jobs numbers that I think were just fine, the dollar still, as we said, the narrative still seems bearish. I want to be in this trade unless something changes and gets me out for what relatively could be a small risk, because if we have, again, this week, we trend higher during the week, and then CPI and PPI kind of confirm the bias that we're talking about, we very well could see the euro come back and retest this 1.11 level. So we'll see, but I am long. We'll see how that goes this week. And one area that I've just been still struggling with, you put me on the spot one time, Ivan, I've still been incorrect with my gold ideas. I took one loss trying to catch a buy trade, and now I'm watching to see for some sort of reversal. What do you think about gold right now? I find it too bearish for now, but I'm watching it close. What do you think?
How do I put it? There is a discount, but the discount is not free. if that makes sense. I wanted to around 2000 or 1980, like back down to a much deeper level. I feel like right now it's quite in the middle. So I like the uptrend. It's seasonal. It's supposed to continue higher. It's just short term a new low. So that I don't like. So what is the markets I'm looking for? I'm looking for basically higher high, higher lows, like this kind of market, and not necessarily that kind of market. So I try to avoid this and try to wait for it to turn around again. If that makes sense.
No, I agree. I would like to see gold show me something, show me some strength before I get tempted back into another attempt on the long side. But it's been I've only taken one loss on it, but you know I'm willing to have my heart broken again if it at least shows me some strength first. You know what I mean? It's kind of like if it's like in a relationship. If you show me, you know, that you're willing to put in the work, I'll meet you halfway. But you know, that's how I'm having an ongoing love affair with gold right now, Ivan, as you can see. What about the yen pairs? Yen, bullish, bearish? This is you're the yen guy. So what's the latest?
The thing is, okay, okay, I'm gonna be more serious now. Okay, so the seriousness is that last week we had the earthquake with tsunami, was only 2 meters, and what I said in chat around first, I said it will be yen bullishness until there's no more consequences, and the consequences kind of never happened. So yen then by default then went bearish because there was not so much damage as you would expect. So now it's just in the middle. It's just 50-50. Last week was very straightforward, straight up. Gave us a discount on Tuesday. I didn't take it. I didn't see it. I wasn't at the charts. But so right now it's like hands off deck because we have made a new lower low today, and it can go higher or lower. It's very random at this point.
Okay, yeah, fair enough. I think it depends, I guess, too, which area of the yen. It's a broad brush, I guess, to draw. Because if you're talking dollar yen, that brings into the conversation all the stuff we spoke about with the dollar. But if you take a look at like pound yen, I know you're fond of your Aussie yen and Kiwi yen, some unique trades in each one of those. But I would agree. I'll look for some direction here this week on perhaps whether it be something from Japan or even just the CPI, PPI, what that sets the stage for kind of the narrative, I guess, right? Are we going to see more risk on in the world? Or are we going to see more risk off in the world? Because, both of those could heavily impact the yen as well. And Frank mentioned this earlier, the dollar yen specifically it usually does very closely follow yields. So if you very much think that yields are going to continue to come down, dollar yen on the bearish side could be an interesting play. They again, you overlap the two of them, and you could take a look. We'll just pull up USD JPY just to cross it, and you could see they generally move together when they're going up, when they're going down. It's not a perfect correlation, but you can see we've had a little bit of a pop here, downtrend, uptrend. So interesting play. We'll see if that if yields are going to come down here this year. I've entered on the turn of the year, been pretty bearish on dollar yen, but we'll have to see if it kind of also matters what the Bank of Japan has to say, as you're pointing out, because we've talked at length about if there's interventions and if they're serious or if they're just talking into the market. It's a close, sort of Game of Thrones to watch.
Well, the CPI on Japan on Tuesday. But what we're all waiting for is the wage agreements in February. So fundamentally, it's a bit blurry. It can go both ways. Market can go both ways fundamentally on yen right now. It's not that straightforward case. And I've said to the traders that whatever you choose them with pride and not necessarily be colored by that somebody else took a different shot. I think it's not necessarily 50-50 on yen right now, but it depends what you are focusing on. What are you focusing on, the current, or are you going to focus on what is about to come potentially in February?
Sure. Yep, exactly right. Well, Ivan, we've got a busy news week here. I want to thank you for coming on. But before we sort of end this here, I just want to let you guys who are in the audience know that if you are looking for coaching, whether it be in a group setting or in an individual one, Ivan specializes in that stuff. Inside of our group, you can see what Frank, Ivan, and myself, what we're up to in the markets, what we're trading with full breakdowns, analysis, etc. And at the same time, Ivan does coaching webinars in a private, smaller group setting for our members. He also does one-on-one coaching as well. If that's something that would be useful to you, if you are at a place in your trading where you're like, I want to take this seriously, but I'm not sure the next steps, I highly recommend you look into what we offer, whether it be in our group or with Ivan specifically. We just dropped the link to Ivan's YouTube channel. If you'd like to go find his socials, if you'd like to go follow his channel, keep up with what he's got there, highly recommended. Again, that's totally free to do. So, Ivan, thank you very much for coming on the show, and I'm sure we'll catch up with you soon.
Thank you very much for having me.
See you, Ivan. All right, guys, we had a full A1 stream today. No, we had our core players here today. We had Ivan, we had Frank, we had myself. So thank you all for hanging out with me here today, as well as the rest of our gang. Let me just remind you that if you would like to get access to those trade alerts that we mentioned, or if you'd like to get access to the webinars, any of that stuff, if that would be useful to you, we'll drop a link here in the chat as we speak, where you can actually speak with a direct line to someone on our team who can get you set up with a membership. We'll drop that link here in the chat. If you're watching this back at a later period, there should be also a link in the description for that. So here it is. Click this link. Send us a direct message. You can get access to the EDGEFINDER. You can get access to our VIP signal service. Whatever you would like, just shoot us a message there, and someone from our team can assist you with that. The S&P moving nicely here. We'll see if I can hold on to this trade for a little bit, but it seems like we might be rounding out here. For those of you who watch my trades closely, you'll know I am also long XLK. Well, I have I shorted puts, essentially a bullish play on tech. Looking good here. We'll see if we can stay in that. What's not looking good is my energy play, looking absolute garbage. I sold puts on this one, not going well, but fortunately we're 3 for 4. I'm long euro. Little recap. I'm long euro. That's going well. I'm long S&P. That's going well. I am short puts on the energy ETF, not going well, and I am short puts on the technology ETF, and that is going very well. So between all of my trades here, we are 3 for 4 on the day. We'll see how this week plays out. And again, you can keep up with all of those inside of the group just by joining us. And again, we'll get you a special discount if you shoot us a direct message here at the end of the stream. Click that link, get involved, come join the action. And with that said, guys, thank you very much for tuning in to today's video, and we will see you back later on. Catch you guys later.
All right, thanks again for watching today's show. Our goal at A1 Trading is to continue to bring you free value through our daily videos and articles, keeping you up to date with the latest market coverage. If you like our content, make sure to subscribe for more. And hey, I'm going to need you to get out of here. We got some heavy equipment on its way, and you're kind of in the way, so you need to move along. Frankie, that hard hat needs to be on your head.